Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Here's another example, and this is the EUI. And this is a daily from about a year or so ago. Again, this was something that I used in the previous class, but another good example of where the equal pace led to that equal target move, and where the pace again had to shift before it was able to see a strong momentum reversal to head back higher into what we looked at as our original examples. Let's go back, though, and look at that EUI, where we were looking at this as that potential short back heading into May. And you can see that the momentum initially really was not quite as strong as this previous drop here. In this previous drop, there was that nice rounding off at highs where the momentum slowed. It allowed it to follow through more quickly. But in the second example here, the momentum doesn't shift. This has this stronger pull higher. So even though the overall momentum is slower than the drop, it's still a pretty strong upside move. As a result, this zone from the previous low, remember when you have a V type of top or a V type of bottom, the zone from the previous low is going to serve as support, but not that exact low usually. Usually it's going to be a hair above it. And that's what you saw happen here, where it pulled into that previous low, basically the congestion at that previous low there, and stalled. And that formed a larger continuation move, which allowed it to break through that support level, where it basically hugged that support before breaking down. The momentum shifted on the smaller time frame, leading to this breakdown. And now you can see it's not only able to hit that larger target level based upon this, but you can drop down to smaller time frame and create an even better idea of where your target now needs to be based upon the most current price action. Because this is a continuation of this previous drop here, you can use that to give you a target level. And you can see that that target level for that equal move holds better than this initial drop here did. So a lot of times you can develop those initial targets and have a really good idea of where you're expecting a security to move into before it breaks lower, but using the smaller time frames, you can kind of manage the position as it moves in your favor. Notice that this is also the zone of those previous lows. Again, this overall pattern here creates that upside down V. So it doesn't quite hit that previous low, but it does come into that zone of that previous low. So we have another target level coming into play based upon the previous low support at the same time as these equal move support zones. Here's another example of this. This is on the CDD, and this had a strong rally from that low to that high. There was a two-wave correction, and then the breakout higher here. When you look at this previous move higher, you can take that and add it on to this new move, and again, help give you a good idea of where target level is going to be. So you can use this concept of this equal move not only on larger time frames, but on smaller time frames as well. So definitely, if you're not familiar with this strategy, become familiar with this strategy. If we were looking at the security here, the CDD, and the momentum was not able to increase on this breakout from this previous high, let's just say it decided to use this as a main correction and shifted momentum here. Well, because it shifted momentum, it would have a much more difficult time hitting that larger target level. So if you immediately saw that shift in momentum, you would want to drop down and go and look back in the past over here and see what you can find for other types of support and resistance. It might be looking at the 138% Fibonacci extension on this move higher, where you can go and add retracement and extension levels with the Fibonacci levels, and I like to use the 138 and negative 38 because they hold really, really well. So it might have ended up holding that 138 extension level as a Fibonacci zone, even if you didn't have some sort of previous price action that might have helped give you a better idea of where to adjust your target to. Here's another example of this, and this is the YUK. And you can see that there was a strong drop here, but it took place with a gap. When you're looking at gap moves, every single time you have a larger than average gap, then that can be considered to be an extreme momentum move. Typically, it's going to have a much harder time to hit an equal move if you see something that literally drops straight down. Even when it continues, usually there's going to be some sort of shift in momentum so that the continuation is more gradual. It can at times still hit an equal move, but usually it's going to come in two waves. So, for example, you had this initial drop here with a very sharp downside move, but in order to hit that larger target level, chances are you would see another pause, pull higher, and then the break lower before it hits it. Oftentimes, though, these gaps will have some sort of shift in momentum as they go and attempt to hit a larger target. And even if the momentum is sharp to begin with, it's usually not able to sustain it if it's that incredibly rapid move. And you can get these rapid moves not just from one day to the next with a gap, but also on the larger time frames. And you can see that take place usually coming out of some major news event, or something really had to have happened in the market to really create that sort of dramatic flush. Maybe it was even some sort of pace change at highs with news, and that can lead to a really rapid momentum move, but usually not quite that pure sharp drop that you see here with the gaps. I would like to take some time here for those of you that have questions. I know that the idea of timing targets and looking at larger price moves is tricky at times, and you'll notice that I really didn't use anything else on these charts other than just the price action themselves. You can add things to your charts such as moving averages. I like to stick to just simple moving averages. A lot of people prefer exponential moving averages because when you're dealing with rapid momentum moves, you can see levels of support and resistance a little bit more quickly. But I find that a lot of times the simple moving averages will kind of create better situations or better strategies coming off of those. And I've used them since I began trading, so I haven't really found any reason to switch and use something else. So I like to use the moving averages, and I'll use the Fibonacci levels as well in currencies because in addition to the futures markets, the currency markets also hold those Fibonacci retracement and extension levels extremely well.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.